Right. So let's do the next question. Indicate with right the type of account under which each of the above transactions is recorded in the general ledger. Where do you record this? Receiving cash. Receiving cash. Asset account will be debit. Equity account will be credited. Double entry for receiving cash by issuing ordinary shares. Asset account debit. Cash account debit. And the equity account will be credit. Stated capital will be credit. The second one, purchase goods for 1 million on credit. Purchase goods for 1 million on credit means inventory will increase and it will increase the liability. Liability account will be credit. Purchasers account debit, creditors account credit. First transaction, ordinary shares. Yes. Devalue the land for the first time, which resulted in deficit. So it will decrease the land account credit and the equity income. So since we have expenses, we can debit the expense account. Revaluation loss, a deficit. Losses will be taken under expense account. Expense account. So since we have a separate expense column, you have to take it in expenses column. There's a question. The ordinary share, receiving cash for ordinary shares. Which column do you record in the cash receipt journal? It's under other receipt, not under other income. It is recorded under other receipts. Capital investment is recorded under other receipt. It is not an income. Okay. Number 4. Number 4, incurred advertising expenses 60,000 and it is payable in May 2018. So it is expense, advertising expense account debit and payable account credit. Advertising payable account credit, it's liability. So this is how you record these transactions. Finally, the sequence of prime entry book used to record these transactions in Amal's business. Prime entry books. So what are the prime entry books? Number 1, receive cash. No, this won't come. This is not this question. So that is something different. Okay. Right. So we'll quickly do the MCQs, right? Okay, so let's quickly do the MCQs. Today I couldn't do that game, right? So let's start finding the answers. Business granted a staff loan in cash to Sudhat, who is an employee of the business. Right? Who is an employee of the business. The correct double entry to record this transaction is, that is the answer. So let's see. Staff loan. When you are answering, You can type the question number, then within bracket, tell the answer. Business granted staff loan in cash to Sudha. So this will increase the staff loan account. So you have to answer like this. Question number 1, then within bracket, give the answer. Otherwise, it's difficult for me to check because when question number 2, 3, 4 goes, it's difficult for me to check the answers. Right? So when you are giving the answer, always give with the question number. Okay. Right. So answer for this. Staff loan account is an asset account. This is an asset. Right? And cash will be credited. Cash will be credited. This is not salary. This is staff loan. Staff loan is not salary. Right? So cash will decrease, cash account credit. Staff loan account will increase. Staff loan is an asset account. It is an asset account. Right? So even when we give the question, I have seen most of the students, they have given this answer, salary account. So remember, it is not salary, it is an asset, staff loan. Example 2, the question 2, an example for nominal account. Nominal account. There are 3 types of accounts. Right? Real account, personal account, and nominal accounts. Nominal means income or expense. Nominal means income or expense. Income or expense. Real means the fixed assets. Personal means debtors and creditors. So 3 types of accounts. Right, so answer for this is sales account. Sales account. So question number 2, yes. Everyone has given the correct answer. Question number 3. Which one of the following statements indicate the correct effect to the business of settling a short-term loan obtained from the bank? That is the answer. Yeah, question number 3. Someone wanted to repeat, so I will repeat. Example for nominal account. Now, there are 3 types of accounts. Okay, types of accounts. Number 1, real accounts. Number 2, personal accounts. And number 3 is nominal accounts. Real accounts are asset accounts, the land, building, motor vehicle, furniture and fittings. Okay. Then the personal account means debtors and creditors. Definitely there is one question from this. Nominal account means income expense. So these are the types of accounts. Okay. If the following statement indicates the correct effect to the business of settling the short-term loan. Settlement of short-term loan, cash decrease. Cash decrease, loan decrease. Cash decrease, loan decrease. So question number 3, it's decrease in asset and decrease in liabilities. Decrease in asset and decrease in liabilities. Okay. Next, question number 4. Question number 4. DI Private Limited received a credit note for 10,000 in respect of goods which is sent back to its supplier. Which of the following reflect the double entry required to record the above transaction in the books of DI Private Limited? Double entry. Credit note 10,000. So why do we issue credit note? We issue credit note in the books of DI. Purchases return. So it's purchases return. Purchases return. Purchase return account means return outward. Return outward account credit and suppliers account debit. Return outward account credit, supply account debit. It's a purchases return. Question number 5. Fourth question here, there is a doubt for the fourth question. Yeah, it's credit note. It's credit note, so it's correct. Question number 5. Which of the following statements is incorrect in relation to double entry system? Double entry system. Incorrect. Double entry system provides basis for the accounting equation. That is correct. Yes, because of the double entry system only we derive the accounting equation. There is a doubt. So sales return, is it an asset? No. Sales return, it's a reduction in income. It is not considered as an asset. It is considered as reduction in income, sales return. Number 2, is the method of posting transaction to the ledger. Double entry system only. Yeah, that is correct. Using the double entry system, we post the transaction in the ledger account. Its fundamental rule is that for every debit entry, there should be a corresponding credit entry. Yes, that's correct. Then number 4, it helps to assure the arithmetic accuracy of the transaction posted to the ledger. It is also correct. It ensures that all the transactions have been correctly recorded in the ledger. That is wrong. It doesn't ensure. It doesn't confirm that all the transactions are recorded correctly. Let's say cash purchases, sometimes cash purchases, actual double entry is cash account credit, purchases account debit. But without recording like that, if they debit the cash and credit the purchases account, the double entry is correct, right? Debit and credit is there, but there are errors in the accounts, in the books. So it doesn't ensure all the transactions have been correctly recorded. Right? So most of you all have given the answer as 4. So that is wrong. Okay, so make a note on that. We can't say answer 4 because it, it, it helps to assure the arithmetic accuracy. Arithmetic accuracy is yes. It helps to assure the arithmetic accuracy. Arithmetically, you can see debit and credit. Arithmetical. But it doesn't mean that all the transactions correctly recorded. Here they are saying correctly recorded. Here in the answer 4, it says arithmetical accuracy. Arithmetically right. Plus minuses, debit credit, that part is correct. Right? If you add 10,000, you have deducted or credited 10,000. Arithmetical, it's correct. Right? Finally, if you prepare the trial balance, arithmetically you can check, okay, debit side is equal to credit side. So arithmetically it is correct. But it doesn't ensure all the transaction correctly recorded. That's the difference. That's the answer for third MCQ. Third MCQ answer is number 4. Right. Right. So let's move to the next one. In which accounts brought forward balances can be seen to the next accounting period? That is the answer. It means we are taking the balance to the next year. So there are 3 accounts: assets, equity, and liability. So these 3 accounts, we take the balances to the statement of financial position. Income and expenses, we take the balances to the income statement that will close the accounts. So here the answer is assets, liabilities, and equity. 6161. Yeah. So all of you all have given the correct answer for this. Question number 7. There is a question: carriage outwards and carriage inwards comes under what accounts? Carriage inwards will be added to the purchases. It is transporting goods. When you are purchasing the inventory, we transport the goods to our stores. So it's a part of the purchases. That's therefore we add the carriage inwards to the purchases account. Carriage outwards means the stock we are delivering to the customer. It's a delivery cost. So it will be considered under selling and distribution expense. So that's the difference between carriage inward and outwards. Right, so question number 7. Yellow Private Limited purchased goods for 100,000 on credit. 80% of such goods were sold for 125,000 on cash during the year. Which of the following statement shows the correct impact on the accounting equation if these transactions are recorded as per the double entry system? Seven. I got 2 answers. Most of you all have said 3, and there were 2 saying answer number 1. Right, let's see. Asset equals capital plus liabilities. Yellow Private Limited purchased goods for 100,000 on credits. So asset increase and liability increase. It's a credit purchases. 80% of such goods were sold for 125,000. So 80%. Out of 100,000, 80% means 80,000. So stock will reduce by 80,000 and cash will increase by 125,000. Capital will increase by 45,000. So you have to do this. Now the net. What is the net? 181.45. 45 increase. This is 145. This is 100. So answer 3. Liability increase, capital increase 45, asset increase by 145. 3, 3, 3. When you are giving the answer, please give it the question number. Otherwise, it's difficult for me to track. Question number 8. Question number 8. What is the answer? On 31st March 2014, an entity sold goods which cost of 30,000 on credit by allowing 10% trade discount on the selling price of 50,000. The buyer settled the payment after 2 weeks. Upon settlement of payment, the buyer was given a further cash discount of 2,000. What is the effect of the above event on the equity of the entity as at 31st March 2014? And it's a good question. What is the answer? Please show number 7. Yes, here is number 7. Question number 8. I have got 3, 1, 3. Right. Number 8. So let's do number 8. It's a good question. What happens to equity? Asset equals equity plus liabilities. Asset equals equity plus liabilities. On 31st March, an entity sold goods which cost of 30,000. So stock will decrease by 30,000 on credit. Okay. By allowing 10% trade discount on the selling price of 50,000. So what is the selling price? Selling price is 45,000. Debtors. So the profit from this is 15,000. profit. Cost is 30,000, stock will reduce by 30, and selling price is 50. From that, 10% discount. So it is a trade discount. So trade discount is not recorded in the books. And trade discount is not recorded in our books. So after the discount value only, we have to record in the books. The buyer means the customer. Settle the payment after 2 weeks. Upon the settlement of the payment, the buyer was given a further cash discount of 2,000. So when he settled, debtor will be paying, debtor will completely settle his amount 45, and we get cash plus 30, so 43, and 2,000 is a discount allowed. Discount allowed. So what has happened to the equity? Plus 15 minus 2 means 13 plus. Equity will increase by 30,000. So most of you all have given the correct answer. Yeah. Only few who has given answer 3. That is wrong. I think they have taken the trade discount into the accounts. So remember, you don't take the trade discount of that 5,000. You don't take that. Okay. Next. Question number 9. So can we consider 2,000 because they are asking? Give me 1 minute. 31st month. There is a small correction in the previous one. There is a small correction. They are asking us to calculate the effect of the above events on the equity of the entity as at 31st March 2014. So this was 31st March 2014. This transaction on 31st March. The buyer has settled the payment after 2 weeks. After 2 weeks means it will be on 14th or 15th of April. April 2014. 15th of April. Okay, so you have to consider only the transaction. Only the first transaction. Right? So there, it's not number 1. Then what is the answer? Equity will increase by, equity will increase by 15,000. Only first transaction you have to take because of the date. Is the trade discount always included in the selling price? It is mentioned, it will be mentioned in the question. trade discount, with the discount or without the discount. It will be mentioned in the question. Right. So next question, question number 9. That is the answer. Question number 9. In which of the following instances will a sole proprietorship shows a loss if the additional capital introduced by the proprietor is much higher than the drawings made by the proprietor during an accounting period? Sole proprietorship shows a loss if additional capital introduced by the proprietor is much higher than the drawings. Additional capital is higher. Say additional capital is, let's say it's 100, drawings is, let's say 40, as an example. So effect of the capital is increase. Capital increase 60, right? And if you take asset equals capital plus liabilities. Capital is increasing. That is the answer. Question number 9. Capital increase. Then, when does there is a loss? Which instance shows a loss if the additional capital? Okay. So if this is increased by 60, assume that you had asset 100. Okay. Assume that you had asset 100, capital 60 plus liability 40. If the capital increase by 60, now we'll consider these instances. When total assets decreases during the period. If the total asset decreases, this becomes, let's say, 80. Then this will also, here the total will be 120. This won't change. Then what is the effect here? Effect will be minus. Right? So if you want to make this 40, here the net results will be 80. So this is correct. When the total asset decreases, then there is a loss. When total liabilities decreases, then what happens? I will explain again. Let's take it to whiteboard. Assume that assets the equation is assets equals capital plus liabilities. This is the accounting equation. Now we will take example assets equals capital plus liabilities. Take capital as 60 plus liability 40. Now in the capital column, what we have is additional capital, and additional capital is, let's say, 50, and drawings, let's take 30. So the difference is 20. Okay. Then there will be a difference. You need to have profit or loss. You need to have profit or loss. Then the asset, what happens to asset? Here there should be a loss. What is loss? Let's take an example. Loss is 40. Loss is 40. Then what is the answer? 40, 110, 80. So this is the situation. Additional capital is more than the drawings. Then this is a loss, means asset is decreased. Asset is decreased. Total liability decreases. Total liability didn't decrease. Right? Total liabilities exceeds the total asset at the end of the period. So that is also wrong. Right? Total liabilities exceeded. Total liability didn't exceed. When the increase in total liabilities is greater than the increase in total assets. So you can take, if this is more, this is 20, then also asset will be increasing. Right? So that is also an answer. First one is the answer for this. Number 10. You are given the following equations. Which of the above accounting equations are correct in relation to a sole proprietorship? Correct equation. Assets minus income equals capital plus liabilities minus expenses. Is it correct? Yes, that is correct. Asset plus expenses equal capital plus income plus liability. So income they have taken to the other side, expenses also they have taken to the other side. Net assets equals capital. Yes. Net asset equals capital. That is correct. Assets minus expenses equals capital liabilities income. This is wrong. C is wrong. D. Profit equals opening net assets minus closing net assets minus additional capital plus drawings. This is wrong. because profit equals closing net asset minus opening net assets. E. Net assets equals total assets minus non-current liabilities minus current liabilities. This is A, B, and E only. Right. So we have one more part. I'll do that as well. So this one I'll just show how to record this. Question number 4. Question number 4. So we have a purchases journal and the return outwards journal. So here there is a VAT column. In the purchases journal there is a VAT. So how to record if there is VAT? Right? So if there is a VAT amount, total value is 45,100. Value without VAT is 41,000. VAT is 4,100. You can outward also say. Right? So I'll show you how to record this. Right. Purchases. And we need a creditors. Return outwards. Outwards. And also we need a net control account. Net control account. Right. So let's record the transaction. So initially we have the purchases 45,100. Right. So when we are purchasing 45,100 worth of goods, creditors account will be credit 45,100. Total amount will be credited. And purchasers account will be debited 1,000, and the VAT control account. This is an input VAT. Input VAT. Purchases are our input. So that control account will be debit 4,100. Later, I will have a separate session on VAT, input VAT, output VAT, purchases and sales VAT. So I'll do a video and share it. You can follow that. Then there is a return. Return outward. What we purchased was returned. So the creditors will reduce by the total amount of 2,530. And the return outwards credited 2,300 and the VAT will be credited 200. So this is how we record this in the ledger accounts. Right. Okay, so record the above information in ledger. So I'll just show double entries related to that.